What's up, good people? My name is AJ, and you are watching Straight Talks. Today, we're talking about the most popular broker-dealers for financial advisors to clear through or work at, and then I'll share my personal opinion on some of those bigger names. If you're already a financial advisor or someone who's hoping to get into the financial advising industry, or if you're a client, a potential investor who's considering working with an advisor or with a broker-dealer to invest funds with, then this video is meant for you. As someone who works in the industry, I can speak a little bit to a few of the differences between the different firms that are all considered broker-dealers and the different types of those firms. And then I'll share a little bit of kind of an inside peek as to what reputation some of these different broker-dealers carry amongst people who work in finance. As it relates to specific companies in this video, please keep in mind that everything I share is only my opinion and not necessarily backed up by proven facts. So these could just be things that I've heard from third parties that may or may not be true. But I will share my thoughts on some of the differences and some stories I've heard about different broker-dealers out there. Probably the best way to categorize broker-dealer firms is into three main groups, and most financial publications or articles out there that you'll see will talk about them in these three different categories. The three main categories are wirehouses, regional broker-dealers, and independent broker-dealers. Starting with wirehouses, they also can be called full-service broker-dealers, and we'll get into kind of why that is. I don't actually know what the specific term wirehouse means, but firms and franchises that clear through wirehouses, the big two being they're often some of the largest financial planning and investment management firms in the country, so they can definitely be seen as some of the most prestigious broker-dealers to work through. The reason that they can be considered full-service broker-dealers is because those businesses also have investment banking or sell-side operations attached to their corporate entity. What that basically means is that those corporations are also involved in things like leveraged buyouts and initial public offerings of companies. Those are all activities that are generally considered sell-side because you are selling businesses either to other businesses or to the public. Because of that business model, then wirehouses have been known to have very efficient and lucrative sales funnels where you have some of the richest and biggest businesses in the country that sell themselves through an IPO or something, and the corporate owners raise $400 million or whatever it might be. The banking side would then court the clients to the wealth management division of those wirehouses, which is why you end up with some of the biggest firms in the country in terms of AUM and revenue and all that being through Morgan Stanley or Merrill Lynch and potentially a couple others, but those are the big two. Relative to the two other types of broker deals, I personally know the least about wirehouses, and so in my uneducated opinion, I really just see them as the exact same. I don't notice or hear of any differences between the two. They both can have very great reputations on one end, and they can have poor reputations for other things as well. In the positive light, I mentioned that they have some of the largest sized franchises out there. They can be seen as very prestigious. They're often the biggest offices in places like New York City and LA, and the richest clients are clients through Morgan Stanley and Merrill Lynch advisors often. But these firms have also dealt with accusations and stories of major conflicts of interest because of that full service mentality that I mentioned previously. There are lots of different ways that conflict of interest can happen, but the classic one is that you've heard of stories where the investment banking division at, we'll use Morgan Stanley as one of the examples here, has an IPO that they're working on, a company that they're going to take public, and so they want to sell the shares of that company's stock. That investment bank, their division, decides what price they're going to issue the stock at, and they want to be able to pick a price that's going to raise the company a lot of money so that their commission will be higher as well, but also is not too high that people are still going to buy up the shares of that IPO. So you've heard about stories where the investment banking division accidentally prices the stock too high and the shares are very low subscribed, meaning there aren't that many people willing to buy the shares on the open market at that price. So then there'll be some hush-hush operations where the financial advising division on the other side of the table is incentivized financially to sell to their clients shares of certain IPOs that the banking division is working on the deal for. That is obviously a huge conflict of interest, and I think the banks have actually gotten in trouble for cases like that in the past. I'm not saying this type of activity definitely happens or always happens, but it's something that is worth mentioning, and if I was a client considering working through an advisor who's with Bank of America, Merrill Lynch, Morgan Stanley, through one of those wirehouses, I would definitely ask them of that question if they've been involved in any scenario like this or if they've heard of scenarios like this. And if their answer doesn't seem totally honest to you, that could raise some red flags. So it's probably worth discussing with them. And if you're a young person looking to get into the industry, working through an advisory practice at one of the wirehouses can present a lot of opportunity just because of the size of some of those practices. There's a good chance that you can find some job postings through a group that you meet the people and you enjoy the people there, because there's going to be a higher quantity of positions available through those firms. So it's a route worth considering. Next up, we have the regional broker-dealers. These are going to be firms like Raymond James, Ameriprise, Edward Jones, and a few of the other more household names that I think most people will associate when they hear the term financial advisor and they think about who maybe their personal financial advisors work through. These are pretty well-known offices. Unlike the wirehouses though, in my opinion, almost every firm under this regional broker-dealer category is very different, and they all seem to pick a specific part of the wealth management or financial planning field and try to say that they're the best at that, and they focus their business around that as kind of their core competency so that they can try to differentiate themselves in the marketplace. For example, Edward Jones is known for contacting their clients very actively. I think they have some of the highest rated client contact ratios in calls that they make to clients, and also clients returning their calls and emails as well, and all that type of thing. So there's a good reputation there, and if you're a person considering working with a financial advisor, you should know that if you look to someone who's at an Edward Jones office, they're probably going to be a really proactive communicator with you. Edward Jones, on the negative side, has been known to have some of the highest fees in the industry, so certainly you want to understand what your fees are if you're working with someone through that firm. But more importantly, at least in my opinion, is they are known as being the most restrictive broker-dealer in terms of what the financial advisors and then in turn the clients that work with them can actually invest their money in. I could be wrong here, but I believe for a long period of time, Edward Jones financial advisors could literally only invest clients' investments in American funds, mutual funds. That was the only fund family that they could use. They couldn't use Fidelity, Vanguard, TD Shaw, anything else. They could only use American funds and maybe even just A shares, which honestly sounds like a horrible working environment for most people. Now, here's something that could just be a rumor, but I feel like this had some legs a few years ago. I had heard that Edward Jones corporate offices were considering requiring all of their advisors to drop the CFP, that held the CFP designation already, to drop that and stop using the letters, because the CFP board at the time was increasing their standards of duty that advisors hold to clients that hold that CFP charter have to exercise when working with their clients to a level that was above the standard Edward Jones was comfortable with their advisors having to be held to. So the corporation was just going to say, hey, you got to drop the CFP. I know that didn't end up happening because there are a lot of Ed Jones advisors out there who still had the CFP, but I think that was a pretty serious consideration for a while, which again just would have been absolutely nuts. Another one in this category is Ameriprise. Their thing is all about financial planning. All their commercials, all their advisors are going to talk with you about the importance of building out your personal financial plan in all their businesses. And in a way, I can agree with that. There are also independent RIAs out there that only will do financial planning when working with clients. So there are other groups that adapt to that mentality as well. But I think Ameriprise is the most stringent on that in terms of the entire corporation having a push towards that financial planning experience when working with an advisor. And then for the third example I was going to give, Raymond James, I would also maybe categorize like Stifel into that group too. In my opinion, those are like more the older school broker dealers where you're just going to be assigned to one person. They might call themselves a financial advisor, but they're really just a broker, and they're going to call you every month or so or every quarter with a investment recommendation update, and they're going to want to change your account around this way or that way. Of course, that's not going to be representative of everyone because this is a generalization, but that's kind of how they come off in the industry. And so maybe that's exactly what you want as a client. We have clients in our practice that call in very often and really wish that we called them more often with like individual stock recommendations, and that's just not really our business model. So they could potentially be really well suited in an office like the ones I just mentioned. And if you're considering working in the industry, just know that if you want to be like a stock picker or a true broker where you're just like calling for commissions all the time, maybe one of those two firms would be the place for you to go. The other thing I wanted to mention there too is there are a lot of people majoring in like financial planning or looking for internships in financial planning. I think Ameriprise franchises are great opportunities for people in that category. If you're looking for a job like that, just LinkedIn, email, call every Ameriprise franchise within 100 miles, ask them if they're going to hire a financial planning intern for that summer. There's a chance they're going to say yes, so that could be one opportunity to look into. Finally on my list, we're going to be talking about the independent broker-dealers. And they get that term independent because financial advisors working through or clearing through their services truly are independent advisors. There is very little connection from that advisor's practice and the clients they service to the corporate office that they clear through. It's kind of just like a commodity service, especially with the biggest two players, which are going to be TD Ameritrade and Charles Schwab. I don't think I have anything very good or bad to say about either of those two. I mean, they're basically commodities. They do a good service for really cheap for a lot of advisors out there, and many RIAs are going to be custodied through TD Ameritrade and Schwab. The client's assets will be held there and they'll process their trades through those groups. But those corporations don't provide really any oversight or any services to the advisors, like any compliance services. You know, if you're clearing through TD or Schwab, you have to have a chief compliance officer on site and all that. So if you're a client considering working with a firm who potentially clears through one of those two groups, just know that almost all of the responsibility and oversight falls on your advisor. So it might not sound like a huge difference, but it really does matter when all these other firms that I've mentioned have these pretty tight, especially Ed Jones, have these pretty restrictive corporate offices that can control what types of investments and what types of strategies advisors are using with clients. That can be good in some scenarios when you run into an advisor who thinks they know everything and they start trading your money left and right, and sometimes that could end up not working out in your favor. With Schwab or TD, the advisor is going to have full control to be able to do that type of thing. So you certainly want to know that your advisor is only going to do what's best and what's right for you, and that they're a really smart person, meaning they're not going to make any stupid mistakes in managing your money. There's just more liability with advisors through those franchises, and that could be a good thing too, because they also have more freedom. There's also less red tape in how they manage investments and how they manage their business, so that could be a good thing too. It's just really dependent on the group that you're working with, so make sure you know them very well. And then the major player in terms of like in-service face-to-face client meetings, rather than just being like an online brokerage service in the independent broker-dealer space, is LPL. LPL really dominates in this category because they still are a 100% advisor payout firm, just like Schwab and TD, meaning all the revenues from clients' accounts get paid to the advisor. And the advisor actually just pays LPL like a monthly subscription or, quarterly subscription fee to clear through their platform. So they are still totally independent of the corporate office, just like in the other two examples. But they do a little bit more marketing in terms of calling themselves an LPL office from time to time relative to the other two independents. From a client's perspective, it's similar to the last two that I talked about. You definitely want to know exactly what your advisor's up to because they have a lot more control over your money and how your investments are managed. And from the advisor's perspective, it's really cool to get the independence of a brokerage house like LPL, but there's one huge concern that you hear time and time again. And on surveys that independent third parties put out to financial advisors, all the advisors who work through LPL kind of give these same answers over and over, which is that their technology package is just terrible and they are really inhibited in their ability to conduct business in the way that they want to just because their technology systems are so bad and they're down all the time. I don't know, I haven't used them myself, but that could be a major problem if you're considering working through an advisory practice somewhere. Maybe an honorable mention here too for independents would be Commonwealth. I don't know too much about them specifically, but I just hear a lot of good things. They're a smaller group that I see some advisors flipping to left and right. So Commonwealth, maybe look into it. They're an independent, smaller practice that advisors can clear through, and they generally have a solid reputation from what I've seen. To wrap it up, I'll give you a few of my personal opinions on kind of what directions I would be leaning if I was someone who wanted to work in the industry or if I was a client considering working with advisors through different broker dealers. I personally kind of like more of an independent approach because corporate office oversight can be kind of annoying. So I mentioned Commonwealth was kind of a cool one. I might do an LPL firm if the firm I was going to already had a well-established tech package or tech stack, as they might call it, because then you're going to have less to worry about from a technology standpoint. The onlines would be cool, TD and Schwab, but there just wouldn't be a ton of corporate office support in your day-to-day activities, which I know I benefit from in the franchise that I work in a lot right now. I certainly wouldn't go to a firm like Edward Jones. They have a reputation of just having so much red tape on advisors and will enact policies that at times seem to hurt clients, not benefit clients. So they generally don't score very highly when these independent third parties ask financial advisors, hey, do you think that your broker-dealer has your client's best interests in mind? I think you see some no's from Edward Jones from time to time. Also, the business model is just weird from the financial advisor standpoint. There's like 1 million offices through Ed Jones. It's like Subway or McDonald's or something. And they're like every 3 miles in populated areas. I think you get like assigned to an office, and then the corporate office just tells you what clients you can work through, and you can't like step on anyone's toes and working with people who are in different geographic locations. Again, I'm not exactly sure about all that, but that's just what I've heard about Ed Jones. It doesn't seem like that favorable of an environment. There are a ton of other broker dealers that I didn't mention here, and I would also love to hear some opinions from any of you if you think any of the things I said were wrong, or if you have other tidbits that you could add about those broker dealers. Maybe you work for them or you've worked with them in the past or whatever. So feel free to let me know in the comments here, and we can all have discussions on either what I said that you disagree with, or points about other broker dealers. I'm happy to have those. So I appreciate that type of stuff if you want to leave anything down below. And as always, thanks for watching.